Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. One thing that gets often overlooked when it comes to business ownership is this additional tax called sales tax, and it gets commonly misconstrued with income tax. And this primarily relates to product-based businesses, but service-based businesses also can get exposed to sales tax. So in this episode, what I want to do is make you aware of the possible sales tax requirements for your business, but also just get you thinking about whether this applies to you. Talk to your tax advisor if it might, and also to give you the tools you need to come up with a plan to implement this if this does apply to you. So for the most part, if you're listening to this episode, you may not be collecting and remitting sales tax, but I want you to decide from listening to this show whether you think you might need to and what the next steps are. And by the way, if you decide from this episode that this does apply to you and that you need to go do this, zero judgment. Don't worry about it. Once you start doing it and you move forward, usually it's fine. Usually, hey, I just realized I should be collecting and remitting sales tax for like the last year. Oh my God, it's totally fine. What you end up doing is calling up the state, telling them, hey, I need to be collecting sales tax. I didn't realize this. And chances are they will work with you. So I want you to understand that if you're hearing stuff I'm saying in this episode and going, oh shoot, I need to go do that. Do not worry. Do not panic. Do not let that heart rate come up. We got you. It's going to be fine. But my goal here is to make you understand that and aware. I'm trying to make you aware of the fact that this exists and that this could apply to you. So how do you know if sales tax applies to you? Well, in most states, sales tax applies to products and not services. There are certain services that can be subject to sales tax. And I'm talking to you New York fitness instructors. That New York likes to tax a lot of personal services, for example. There are certain states that will tax digital products as well. So be careful about that. Digital products versus digital services. There's a ton of gray area and blurry lines here. So just understand that every single state has different requirements on what is taxable. And what you want to understand first, let's just go into this first, is what states you may have to pay taxes in. Now, first of all, we want to be thinking about this concept called what's called Nexus. Nexus is you have enough of a footprint in a certain state, and how you gain that footprint is having yourself as the owner, employees, warehouses, locations of operation, or what's called economic nexus, which is you sell enough of your product or service in that state to basically have a big enough footprint. So what you want to do first is evaluate what states might you have this footprint in. So let's say you're an e-commerce seller and you run a business out of California, but you have a third-party logistics office that's storing your inventory in Texas. Well, you have Nexus in both those states. By virtue of the location where your inventory is housed, you probably have Nexus in that state. Now, let's just say you're selling a digital product out of Massachusetts, but you're selling a lot to New York for whatever reason. You have a lot of network there, or you're reaching a lot of people there through ads, whatever it may be, right? Now, you're selling enough of that product in New York where you're crossing what's called the economic nexus threshold. And here's the annoying part. Every state has a different threshold. It's so annoying. And this came out of what's called the Wayfair rule. This was when I think it was South Dakota versus Wayfair. So what ended up happening was the government decided, I'm kind of paraphrasing here, but the government decided that if you sell enough of a product in a certain state, that triggers Nexus as though you were operating in that state because you're gaining so much sales out of that state that you're becoming reliant on that state for your operation. And the concept was if you cross these, what we call economic Nexus thresholds, now you have to start collecting sales tax on your products and services that are sold to people in those states. And basically you have to be collecting sales tax on all those sales. Now, Nexus is one thing, and that's the first step. Where do you have Nexus? The second step is in those states where you do have Nexus, is your product or service taxable? And again, this is why it's such a pain in the butt. Every state has different rules on what is taxable. So, and you guys wonder why our job is so hard. So, not only are the thresholds different, but the products and services and the rules around that are different. So, you could have Nexus in a state where your product is not taxable, in which case it's not really affected. And then what you do is you figure out, okay, I have Nexus in these, let's say 1 to 3 states. My product is taxable in 2 of them. Okay, great. Now we go into going to those states to register as a vendor. Register for a sales and use tax certificate, whatever the phrasing is that they use in their local Department of Revenue. You want to find the state's Department of Revenue and say, hey, I think I have Nexus in your state because I've sold this much of my product here, or because I have operations here, I have employees here, whatever that may be. And you want to talk to your tax advisor for sure. You do not want to, if this is the first time you're hearing this, you do not want to go and like do this whole analysis on your own by yourself. You need some help doing that. And I'm going to talk to you about solutions on how you can do this really easily once we get through kind of the criteria, right? So we go through Nexus, we go through, is it taxable? If it is, we want to talk to the Department of Revenue and get you registered and understand that you need a way to evaluate this. You need a way to track what sales you're making in what states. And if you're using an online marketplace like Shopify, like Amazon, that makes it super easy because as you know, from setting these up, you're tracking all that information, right? So that's really easy to do. Also, if you're using a digital product system, like a Kajabi or like a Thinkific, Teachable, right? You should be able to figure out where people are buying these things. What you want to be careful of is if you're selling services where, for example, you're selling a lot of money in services, like a lot of these economic nexus thresholds, by the way, are like 100K or more. Some are lower, right? But you want to be thinking, if I'm selling a decent amount of money is coming in from a certain state, right? I should be looking into that. And there are tools to help you with that. But what you have to do is make sure, however you're selling your product or service, you're also mapping your sales to states. Like you're tracking how much is coming in from each state. And I know that's a pain in the butt, but there are tools that can help you. So if you're not using an online point of sale system that does this, what you can do is get this tool called TaxJar or Avalara. These are 2 of my favorites, TaxJar or Avalara. Number 1, I love TaxJar. I'm a TaxJar partner, full disclosure. I'm going to put my link in the show notes in case you're interested. I love TaxJar because they have such great education. And not that Avalara doesn't, but I just gravitate to TaxJar's videos. If you go to their YouTube channel, it's amazing. They will walk you through how sales tax works in a very non-intimidating way. They're really good with education. So TaxJar, what it does is it actually hooks up to your Amazon, hooks up to your Shopify, whatever platform you're using. They have a ton of integrations and they will extract that data on what states you're selling to and tell you when you are approaching that Nexus threshold. They'll even tell you, I think it's when they're like 75% of the way there. So you get a heads up that you're approaching that threshold, right? And they'll actually manage that for you, along with collecting and remitting the sales tax and doing it all pretty much hands off. I really love them as a service provider because if you were to do this all yourself, between tracking the states, being able to figure out the sales tax rates, being able to ask your customers to pay, program that into your systems, and then collecting and then filing the sales tax returns every month, quarter, or year, that's exhausting. And for a business owner, that is not what you should be doing. So this tool really helps you get that done. And even if you hired an accountant to do this manually, that is still a ton of their time, and it's going to cost you way more money to have an individual do it than to use a software product like this. So you want to be considering that. So let me just go through a couple of misconceptions around sales tax. So number 1, sales tax is fundamentally a tax that your customer pays whenever they buy something, your product or service. So it's really the customer is paying it, not you. But here's how it flows. The customer pays you. Let's just say it's a 7% sales tax and the item is $1. Let's just make it easy, right? You collect 107, right? The customer pays 107, $1 plus tax. You take that dollar, call it income. You're going to take that 7 cents and call it sales tax payable because it is not income to you. It is actually, you are just the parking lot. You are just the intermediary, right? You are just the person holding the money until you file your sales taxes and you pay the state. So really the customer is paying the state, but the state is using you, business owners, as their vessel. They're using you guys to hold the money until they decide that they want the money. And based on how much you collect, you may have to file with your state annually, quarterly, even semi-annually, or monthly. If you're collecting a lot, they may ask for that monthly. And what drives the frequency is how much you're collecting, because the states don't want to wait forever for a lot of money. But if you're only collecting like $100 in sales taxes, they're like, yeah, whatever, do it once a year. We don't care. So think about that. So when you're getting registered with these states, they're going to tell you the frequency, they're going to tell you how to do it, and you're going to have to file sales tax returns and pay your sales taxes. But what you have to do as well is to have good bookkeeping, have good tracking of not only where you have Nexus and where you're collecting, you got to program that in your point of sale. And on the bookkeeping end, you have to make sure you're tracking how much is coming in sales taxes, because that is not your money. And you shouldn't be taxed on that money. Here's the thing. With sales taxes that come in. So if you're charging a customer $1.07 for a product, then what's taxable is that dollar. That's the income. You should be paying taxes on the dollar, not on $1.07. And when you get into big numbers, now we're talking like $100,000 and $107,000, right? So you got to be thinking of the bigger numbers and the bigger impact. You do not want to be paying taxes on sales tax you've collected. So you have to make sure that you've got the right numbers where they're supposed to be in your bookkeeping. And this is also why bookkeeping is so paramount, because you may not be thinking about this. Like, oh, shoot, I thought that was all just income. I've just been putting it in QuickBooks and just saying deposits are all income, when they did include sales taxes in there. You got to be careful. Sales tax is not income and it's not an expense. It is actually what we call a liability. It's a payable. So you increase the payable when you collect the money in, and then you decrease the payable when you pay it out. It's basically treated like a loan in a sense. It's like you're getting money in that technically doesn't belong to you, and you need to pay the government. Make sense? Right? So when you're looking at sales taxes, this is also not, by the way, your income taxes. It's not your income taxes. So when we say, I need to add tax to my product or service, what we're not saying is add 27, 29%. We're not saying that. There's sales tax rates. This is sales tax. Your income tax is your tax bracket that you are taxed on for the money you make as an individual, based on the income that you bring in. Very, very different than sales tax. So when we say add taxes, you only need to add taxes to the price of your product or service. Again, if you have Nexus, if your product or service is taxable, right? So other than that, you don't need to be charging sales tax. Make sense? Right. So that's kind of an overview of what to expect in terms of sales tax and if this may apply to you. So as I mentioned at the beginning of the episode, you really want to make sure that if this applies to you, that you go about it the right way in making sure you get registered. Talk to your accountant, talk to your tax advisor if after hearing this episode, you have a suspicion that this may apply to you and that you may need to be doing this. Otherwise, keep aware that this is something that you may be faced with, and it never hurts. Do some research. Go look at the state websites where you may have Nexus. Go do some research on whether your product is taxable, because I'll tell you what, a lot of people don't realize how many different things are considered taxable. And don't forget to use your state Department of Revenue as a resource. Most of the time, they're quite friendly. If you give them a call and just ask them and you say, hey, this is what I do. It's kind of a gray area. I'm not really sure how to classify this in your sales tax guide. Can you help me understand if this is taxable? Sometimes they'll help you out with that. So don't be afraid to ask. And also talk to a professional like us, and we'll be able to help you as well. So links are in the show notes for any resources on TaxJar or any of the tools that I've mentioned. And I hope that you find this podcast helpful and that you're able to leverage this going forward and understanding more about sales tax and your potential responsibility. Hey, wouldn't it be cool if you could chat with me and our guests about this episode? Well, guess what? You can. Join the Keep What You Earn community now using the link below in the show notes. You can post your questions, chat with fellow business owners, and the best part, it's totally free. Oh, and by the way, it's not a Facebook group. That's right, no noisy notifications or distractions. Just what you need to get the full experience from listening to this podcast and maximizing your value. Meet us over there after the episode to get exclusive content and access to me and our guests for your questions. We'll see you over there. Thank you so much for listening. If you enjoyed this episode, please leave a rating and review on your podcast platform. This small action goes a long way for podcasters to get our message heard by more business owners just like you. Be sure to check out the show notes for links to information about our guests and ways to get in touch with me. We'll see you on the next episode.